Hello and welcome to KYC, a brand new show at NDTV Profit. And in this show, we take a look at a company. We talk about how things have panned out for the company in terms of its financials over the past few years. We also talk about the current state of affairs, and of course, consider the many other various parameters and talk to you about how the company could potentially do. Of course, we'll also get in a perspective many times of management, but also often an analyst with a perspective on the company. And today we're going to talk about Biocon. Well, Biocon has been one of those pharma companies, or should I say healthcare companies, which has been in focus, and it also has seen a lot of volatility of late. But to tell you what it does, well, it's a manufacturer of biotechnology products. And it does look at biosimilars. Of course, it's also into research services. We've already seen Syngene International spin off from Biocon a few years ago. It's also into generics. Biocon, of course, of late has been in the news on account of biologics. It's business which has been taking off significantly. And we're going to take a lot of these aspects and talk about that in future. But as we always do in every show, well, we address the company with respect to what it has done. So among the many other factors that we are in fact talking about, we talk about the income statement, how the growth has been for its profitability, as well as its, your bottom line, the kind of margins it comes up with, how the state of the balance sheet is at this point in time. We also talk about production and guidance numbers along with the return ratios, and let's not forget the cash flow statements as well, something that we talk about too. Moving on, we're also considering the shareholding, the street credentials in terms of how the stock has done, as well as street coverage and valuations. But, that said, let's start by taking a look at the first thing, and that is, of course, the financial performance with respect to its income statement. Now, we do know that, it's been a fairly challenging period for Biocon. But I'm gonna also get in my colleague Varsha, who's going to join us to tell us about a lot of the other aspects. But as far as Biocon's financial performance is concerned, we're looking at a 27% growth, CAGR as far as its revenues are concerned. Its EBITDA growing at around 27%. Its margins for FY24 stood at around 22%, but its profit for the same period has only grown by as much as 11%. And of course, there are plenty of challenges there. But you will find it surprising that while the CAGR in terms of its top line and its operational metrics has been fairly good, and we'll give it a thumbs up to that because, it's not really translated into the kind of traction in the stock price. And the more we uncover about the stock and the more we uncover about the company, the more we will realize as to why there's been so much volatility in the price action. So let me hand it over to Varsha, who will talk to us about the balance sheet. Varsha, how's that looking?
Well, thank you again for that. So if you look at the balance sheet, it's pretty not good. So we would actually give a thumbs down for that. Now why? Because if you see the equity shareholders, that stand at around 20,000 odd crore, but borrowings is actually a concern, and that's also one of the reasons why the net profit CAGR was 11% versus 27% of revenue CAGR, because of the high interest outgo that the company has seen. Now, if you see the borrowings are at 16,277 crore, though company has acquired low financing debt. The benefit of that will be seen in interest cost, in next 1 year. But yeah, currently the borrowing stands at around 16,000 odd crore, whereas out of that the long-term borrowing stands at around 13,000 crores, and short-term borrowings at almost 3,000 crore. Now, if you see the cash in bank for the company is around 2,259 crore. Now, the main concern over here, which actually investors also didn't like, is the debt position of the company. And that's the reason the company has gone for low financing debt agam.
Sure. All right. So that's as far as the balance sheet is concerned. So not exactly in the strongest of wickets out there, because of your long-term borrowings coming through and taken together. Well, it's for a pharma company, this debt to equity ratio looks slightly higher. But let's talk about your return ratios then. And again, the return ratios have not been up to the mark. We're looking at your return on capital employed just at around 6% for the last couple of years, which means that your return on equity ratios will also be fairly low. And this certainly is a bit of a challenge, because you'd like to look at a 20%, 25% and over that when it comes to these key return ratios. So it's a thumbs down for that. But cash flows, Varsha, how do they look right now?
So, Agam, the reason why return ratios are low is one of the reasons because they're investing a lot. Now, so because of that, your base increases and you're seeing this low return ratios. Now, why I am saying this, because this is linked to the cash flow from operations also, rather net cash flow. If you see, company has got healthy cash flow from operation at around 3,000 crore, which has increased over the years. But if you see the net cash flow is at negative 380 crore. Now, why? Because company has been investing a lot. That's the reason why you see a net cash flow is negative, though operation cash flow from operation is positive. And this is okay. I would like to give a benefit of doubt to the company, because this is on the growth path, and company is actually entering into biosimilars, or rather into Biocon Biologics is into biosimilars, and they are investing a lot when it comes to their Malaysian facility. So we'll see almost $90 to $100 million they are investing. So this is because of the capacity expansion. You see your cash flow from investment is so huge increase when it comes to investing activities, and that's the reason we are seeing this negative cash flow. But on the operational side, cash flow from operation, we would like to give a thumbs up.
Okay, so there you have it. Those are the most important, financial statements of the company. Let's look a little bit beyond and talk about the shareholding. It seems like it's a fairly well-held company. If you consider the shareholding, while the promoters continue to hold over 60% in the company, there's a fairly large institutional holding in Biocon as well. Domestic institutions particularly, as well as FIs, and it seems like there's not been a lot of selling from the institutional standpoint. When it comes to your outstanding shareholdings, that still stands at around 20%, but overall, considering 80% is with promoters and institutions, we'd give this one a thumbs up as well. But Varsha, the volatility comes into the returns of the share price, and that's not exactly heartening at the moment.
Correct, Agam. So if you see, it has not given much returns to investors. Now, because Biocon was actually not doing much, now why people are betting now on Biocon? Because of the outlook that we'll in a moment speak about. But let's see the stock returns. If in the last 6 months, company has given a 7% return, and in the last 1 year the company has given 37%. While if you see, all the pharma companies have given a good return, while the pharma index in 2024 was a top performer of the year, but this company has not given much returns as expected considering the size of the company. But yeah, outlook seems good, but on the stock returns we would give actually thumbs down.
Okay, and let's talk about the street coverage then. Now, it does seem like there are more, investors and more analysts on the street who are bullish on Biocon as compared to bearish. But what you would also realize is that the overall, downside potential for the company stands at around 5%. So the street is not expecting a significant upside from current market levels. And moving on, the expectation is that, we may see a little bit of, even if we don't see slackness, we're not exactly seeing a more appreciation from here on in the long-term standpoint of view, which is why, we give it a neutral to a thumbs down, but it tilts towards a thumbs down because the downside potential is downwards. But Varsha, what about valuations?
Well, so if you see the price to earning ratio for the company, Biocon stands at around 32. Now, if I were to compare it with the peers, now here I've taken Dr. Reddy's and Aurobindo Pharma, especially Aurobindo Pharma, who is actually investing a lot when it comes to biosimilars. So Biocon is at 32 P, while Dr. Reddy's is at 21 and Aurobindo Pharma is at 18. While Dr. Reddy's have some other reasons, and that's the reason you're seeing at a 21 PE, but Aurobindo Pharma is actually at 18. So if I were to just see at the trailing PE, Biocon does seems high at a valuation level, but company has been given this premium. One thing is the expectations of the biosimilars, number one. Number two, their Malaysian unit, which has received VAI status from US FDA, is other big leg for the company. And also the company's portfolio into generic segment, where you have, you know, your diabetes portfolio or GLP-1 product, which are the hot topic currently. So these key, and also the execution capabilities that the Biocon is expected to have in future. A lot of analysts have given a, you know, a positive note when it comes to the execution capabilities of the Biocon. So these are all the reasons why there may be a slight premium which have been given to Biocon. But of course, you have to also consider this, the 32p that you are seeing because of the low net profit that the company has given, but the valuation has not come down because of the growth prospects that the investors are expecting from Biocon.
All right. So, you know, that brings us to your overall rating. And I know that the total will add up to about 3.5 out of 8. But I'm going to take this ad hoc decision and, you know, revise this upwards to 4.5 out of 8. And the reason why is that I was just comparing it to stock returns. And while we weren't exactly happy with the stock returns, you know, 1 year, it's given you a 37% return. It's beaten mid-cap and the small-cap indices, which is what I realized. So before I come to that, you know, of course, those are the ratings for your income statement or all your financial statements. Balance sheet and return ratios are lackluster. There's no doubt about that. But among the other parameters, let's move on forward and talk about the other factors. So you do have shareholding, which is, of course, a thumbs up. Street credential, well, instead of a thumbs down, we want to revise it to around thumbs up because, you know, when it comes to the mid-cap and the small-cap indices and the kind of movement that they've seen, considering Biocon is currently near a 2-year high. It's not made a 2-year high, but it's currently near a 2-year high. Well, I would want to revise that into a thumbs up in terms of street cred. And of course, the street coverage and valuations, well, they will remain where they are and for good reason, which is why we will have a total rating of around 4.5 out of 8 as far as Biocon is concerned. So there you have it. That's your total return, the total rating as far as you know, this particular healthcare company is concerned. Now, this is as far as you know, what it has done so far. Want to very quickly tell you about what's in store, because that perhaps is the more important you know, thing to keep an eye on. So Varsha, why don't you tell us about the little bit about the outlook as well?
Yes, Agam. So firstly, I actually want to highlight the FDA classification, because those things are buzzing. The Biocon has been buzzing because of these two reasons. One is the VAI, that is a voluntary action indication for their Bangalore facility, and recently their Malaysian facility, which has got the VAI status. Now, what does this mean? This means that this paves the way for the US entry for the products, for the newly launched product. One thing is that, and the VAI is actually the second best classification that US FDA can give to the company. If you see, this paves the way for several new launches in the US in the near term, and also approval for when I talk about the Malaysian facility, so approval of biosimilar aspart from the Malaysian facility is expected. Aspart, please note that it treats type 1 and type 2 diabetes, and the current market size for aspart in India is almost 260 crore. So because Malaysian unit has got this VAI status, now this will pave a way for launch of the aspart, because there are no other competitive biosimilars, at least currently in the market for aspart. If you see the capex plan for the company, so total capital expenditure for FY25 is projected at $90 to $100 million, and they're going to split between maintenance and an expansion of insulin facility in Malaysia. But you'll see limited financial impact when it comes to Malaysian facility in FY25, but a significant impact is expected in FY26. If I were to talk about the outlook, what the management is saying, so they are expecting an improvement in H2 FY25 on the back of continued recovery in Syngene, which is one of their subsidiaries, and also good momentum in biosimilars. So biosimilars is nothing but, I mean, it's the next leg of growth for Biocon through Biocon Biologics, and the new product launches in generics, which I was talking about, your GLP, that is obesity drugs, is other big factor that company is actually betting on. And of course, the execution track record or the execution execution of the Biocon is also expected to be good. So yeah, these are all the multiple triggers which can support Biocon overall.
Right. Okay. So that's as far as Biocon's concerned in terms of its outlook and a handful of insights and key parameters that we need to keep an eye on. But it would, I guess, be pertinent to get in an expert opinion on not just the company, but maybe the sector as well. So we have with us now Siddhant Khandekar. He's the lead analyst at ICICI Securities. Siddhant, good afternoon, and thank you so much for taking the time out. Let's start off with your overall view on Biocon at the moment, considering where you find it and your outlook going forward for the company.
Yeah, thanks for having me on the show at the first instance. So yeah, I mean, whatever development that we have observed over the last, let's say, 6 months for Biocon, I think that bodes well from their, future pipeline. So whether it is the VI approval for the Malaysian facility, or whether it is the VI that they received in November for Bangalore facility. So both these two do augur well for the next launches, because what we have seen over the last, and in fact, taking the case of this Malaysian facility, it's been in the embargo for the last 2 years. I think since August 22, I think when the US FDA first gave the observations, and again the facility received the the CRL in October 23. CRL is basically the observations from the US FDA that the current manufacturing facility will not be accepted in its current form. So now that has been cleared more or less. So the VI for Malaysia is that paves way for the launch of biosimilar aspart in the US. It's not that it's a very huge opportunity as such, because but the important aspect is there is no biosimilar for this product in the US as of now, except the originator, that is Novo Nordisk's Novolog. So besides that, there is no product. The current size of this product is around 750 to 800 million dollars in the US. So I think that can be a good opportunity going ahead. And similarly, the approval of the VI for Bangalore facility will pave the way for other oncology products the approval that they received in biosimilar ustekinumab. And we have also 4 or 5 products which are already there in the market. So all said and done, I think these two developments are very significant, because what we have seen is the biosimilar pipeline, the existing products were definitely doing well, but since the new products were not coming, there is a kind of slowdown in the biosimilar revenue front. So I think that is going to change definitely as we see in the next few quarters.
So Siddhant, just to follow up on that, what is your rating on Biocon right now? Are you positive? Because you have mentioned that we're still awaiting more details on new biologic products. So keeping valuations in mind, what's the way forward?
So as of now, we have neutrality. We have not come up any, target price as such. But I think post the Q3 numbers, I think those are scheduled on 30th of January. We'll be revising the target price for sure. And I think because we'll get some more insights, regarding the future pipeline. Now that the management will be able to, convey a lot of details. So I think that bodes well. I think so post Q3 earnings, definitely there will be a revision in the earnings price for sure. Not from us. I think the state is also becoming know about the latest developments, because what we have seen is sorry.
Please go ahead. Please go ahead.
No, so the major overhang for this company is basically the 1.2 billion dollars of debt that is sitting on the balance sheet because of the Viatris acquisition. So for that, I think for servicing that kind of debt, I think you should need the momentum in sales and EBITDA. So I think this kind of approvals, these kind of clearances definitely will pave the way for good amount of cash flows and in a sense debt repayment as well.
Right, Siddhant, Varsha this side. So overall, Biocon Biocon Biologics is expecting a turnaround or accelerated growth when it comes to H2 FY25. So H1 was not that good, but they're expecting good H2 FY25. So what do you think about that? I mean, do you think that okay, H2 will see a reversal and overall will see a good numbers for the company?
So I think the H2 momentum will only come from the market share gain in existing products. I don't think there will be any new product launches that will take place in H2 immediately. That's what I'm saying. So maybe Q4, at the fag end of Q4, you might see some launches, or maybe 1 or 2 launches from these facilities which were which are just received the VAI. But I think the major momentum for a company as such will come from Syngene. I think that is what his expectation is all about. So Biocon Biologics, I don't think there will be just market share gain and maybe a product launch at the fag end, and maybe launches, in the non-US market, let's say for example in Europe or maybe in ROW markets. So momentum from that, I think, will be mainly on account of market share gain. That is what my expectation is.
Okay. And also, I mean, your comment on the pricing aspects when it comes to biosimilars, are pricing getting more competitive as market is moving, towards biosimilars? Because a lot of pharma companies are actually talking about, biosimilars. So, any thought on that?
I mean, it depends. I mean, there are certain products which have received the interchangeability clause. I mean, that is very important, I think. So, for products which are not under interchangeability, there might be some issues regarding the pricing because I think the patients are not turning to that product because the doctor is not prescribing the product which is not that is not an interchangeable product. And that is peculiar case for our biosimilars. So for products which are interchangeable, I think definitely there will be a traction, but I think that's a slow process. So all along we can say that yes, there is a less price erosion in the biosimilar product, but if that product is, let's say, interchangeable, I think the product, in that case the price reduction is even better. Actually, I would say it will not be that high the way it happens in generics. But for other products which are not interchangeable biosimilars, I think the acceptance is not there, which is why I think the market share gain will not be there. So biosimilar is typically a peculiar thing. I mean, we cannot simply compare that with generics. The way we, term generics and, the assumption is there for, price reduction and stuff like that. Biosimilars are, I think the field of biosimilar is slightly technical, slightly different. So out and out, we cannot say that, there is a kind of a price erosion or whatever. We need to consider the interchangeability factor as well in that case. Yeah.
Siddhant, may I prod you on, some competitors that Biocon has in the Indian listed market space? Do you think that you would be tilted slightly more bullishly towards those names, and what names would they be?
I think in terms of the product pipeline, the portfolio, I don't think anybody is near to Biocon. I mean, to a larger extent. I mean, we have seen players like DRL or maybe Aurobindo, but I think their products will take time. I don't think any of these products will be coming in the market or in the US market before at least FY27. Other markets, okay. I mean, there are certain players who have already launched their products in European markets, in ROW markets. I think Zydus has launched good amount of products. DRL has products. Lupin also has launched a product in Europe. But in the US market, I don't think anybody is near to the kind of portfolio that Biocon possesses. I mean, the kind of pipeline that they have, because I think they were a quite early entrant, right? And it's a long gestation process. I mean, biosimilars, it takes around, let's say, 8 to 10 years to, fructify. So I don't think, other than Biocon, any other player is near to Biocon. Maybe FY27 onwards, FY28 onwards, I think you might see some competition from Indian players, at least in the US market. I'm referring.
Siddhant, because of this, because just you said that first mover advantage will go to Biocon, and we have seen in the last 3 years, company has given what 27% CAGR in revenue, and 11% CAGR in net profit, of course, because of the debt. Now, my question to you is: do you see that Biocon may surpass this 27% growth because of the first mover advantage that company has got? I mean, just
I mean,
a
it
kind of
depends.
number.
Yeah.
Yeah, please go
Yeah,
ahead.
I mean, it depends. I mean, yeah. So, what has happened? If you see the last 4 5 years, this thing, I think because of COVID, I think there were a lot of disturbances. And biosimilars typically are injectable, so I think there were a lot of, so people were not going to hospitals and stuff like that. So, I mean, the base is something that we need to consider. Then we have seen this kind of slowdown on account of, the plant-related issues. So beyond that, now that we have a slightly lower base again, and then there will be at least one or two new products launches that will be taking place. I mean, Ustekina will be there, and that is as per the agreement. And then we also have one or two products, maybe Aspart also chipping. So yeah, I mean, the kind of growth that we can expect, and then plus if they are going, aggressively on the interchangeability as well. So I think yes. I mean, I don't have any numbers as of now. I have not modeled any number as of now, but I think the growth definitely will be substantial, and it will be better than what we have seen over the last 2 years, for sure.
Right, Siddhant, we leave it at that. Thank you so much for joining us and giving us your insight on Biocon specifically. And it certainly is at a very interesting precipice at this point in time, considering, well, we're looking forward to more, well, biologic products coming through. And eventually we will know whether or not it can, in fact, match the kind of growth and in terms of revenue and bottom line that we have seen of late. But as Siddhant has made a point, it certainly is looking like a relatively large base. So, while 27% may be in contention, we will have to wait and watch out for whether or not that strength continues overall with that large base. But, I'm going to very quickly also recap an HSBC note on Biocon. This is a very recent one. They've upgraded the company to a buy, and they have a set price target of around 430, which entails around a 9 to 10% up move from current market levels. And they believe that Biocon is set for an operational turnaround. They've also said that the recovery in generic sales will also is something that will aid growth. We also have the FDA clearance of the Malaysia plant, which is removed the GMP overhang. And moving on, as far as the launch of its Aspart is concerned in Malaysia, that could potentially be the next catalyst as well going forward. And they say that they believe Biocon is improving its execution too. And no other known biosimilar flyers are there for Aspart, which is why they have in fact raised their estimates for FY26 and FY27. So that's HSBC's view as far as Biocon is concerned. But on that note, well, thanking Varsha as well for joining me here to taking us through what Biocon holds in store. And on that note, it's also a wrap on this edition of KYC. But don't go anywhere. You're watching NDTV Profit. We'll be back in just a bit.